Hello and welcome to my morning report analysis videos on Friday 16th of November with me, Richard Perry, market analyst at Hantec Markets. The Brexit turmoil continues for Theresa May. There's a real sense that that sterling is under pressure now, and we can see that through how the market has moved in the past 24 hours. It was at one stage down 250 pips yesterday against the dollar, rebounded a little bit into the close, but still remains well off in terms of where it's been in recent weeks. And the political fallout from Theresa May trying to secure this deal continues. Resignations yesterday. There's potential for a leadership challenge that, according to Sky News, is pretty close. And it's a real sort of a sense of uncertainty that we have now in the UK surrounding how Brexit is going to develop over the coming weeks and months. All number of permutations and potential sort of scenarios could play out, and certainly at the moment the markets are fairly much reflecting that, I suppose. I mean, sterling has actually found a bit of support today, and that's generally speaking what we've seen is that the dollar has been a little bit weaker today. The dollar has sort of slipped back a little bit in the last few days. Really, we had inflation numbers coming up a little bit lower than expected. Retail sales for the US was strong yesterday, but again, the sort of rhetoric surrounding the trade dispute with China is starting to sort of turn a bit more positive. So that's helped the dollar to sort of be dragged back a little bit. The dollar strength sort of paired somewhat on the back of that, as I said, treasury yields have fallen away, and that's what we've seen, that the dollar is starting to sort of give back some of those gains. And generally speaking, with this improved sentiment that we've got through this improved rhetoric, is helping equities certainly in the States. S&P 500% higher yesterday. We've seen European markets sort of broadly mixed to slightly positive. So that's certainly helping to improve sentiment somewhat, considering how uncertainty surrounding Brexit is still a key factor there in European markets. But we are still seeing this uncertainty that's playing out, and I think that's going to continue. Anyway, right. So where are we at in terms of today? We've got US industrial production at 215, expected to come out at 0.2%. We've had Eurozone inflation out this morning, and that was basically in line with expectations, so no real surprises there. And as I said, industrial production is the focus this afternoon. My chart of the day is the Aussie dollar. Now, talked about Kiwi yesterday, and the fact that the Kiwi dollar was performing pretty strongly. The Aussie dollar has, again, also performed pretty well in recent weeks. It hasn't yet broken out, because the Kiwi has broken out above its equivalent September high. The Aussie is lagging a little bit, but still is positioning for that breakout. You can see the fact that I've got this slight dotted line here, which is the old long-term downtrend, which has now been broken. You can certainly see when you step back the prospect of a head and shoulders reversal, and you look at the momentum indicators. Those MACD lines are strong, stochastics, RSI positively configured. The fact is that the corrective move earlier this week found support pretty much to the pip on the old October breakout levels, and then bounced and then pushed back higher again. So there is an improving air to this chart now. We've got the 55-day moving average, which had been a basis of resistance, is now a basis of support. Yeah, that's back at 71.67 at the moment, so there is room for a little bit of a slippage, but still, as I said, that the improvement that we're seeing in the Aussie dollar is on a near to medium term basis, and really does seem to be developing. It's just slipped back a little bit today, but I think that's likely to give another opportunity. You've got a bit of a pivot area around sort of 72.40, 72.30, 72.40 as a basis of support, as these indicators just unwind a touch, but likely, as I said, to produce the next sort of opportunity to buy, really, I think, on the Aussie dollar, whereby we've got this improvement that is going now. Breakout above 73.10 would complete that base pattern, and certainly then imply sort of move towards the next resistance, which is minor at 73.80 area, and then on towards 74.50, 74.85, which are these sort of June-July pivot area. So I wish you good luck in your trading today, and I will speak to you again later.